Imagine waking up one morning to discover that the US dollar, long considered the bedrock of global finance, has collapsed overnight. This shocking scenario, while extreme, challenges your perception of economic stability and security. The collapse of the US dollar would mean its sudden and massive depreciation, rendering it unable to support its value against foreign currencies. Such an event would trigger a cascade of economic disruptions, leading to a loss of confidence both domestically and internationally. Businesses and individuals would scramble to find an alternative means of transaction as the established financial norms get upended. The importance of this point is profound, given the US dollar's status as the world's primary reserve currency. This role makes the dollar pivotal in international trade, investments, and finance. A collapse would not just cause chaos in the US economy, but it would also set off a global recession, affecting economies worldwide that rely on it for trade and as a safeguard for economic stability. To illustrate this, consider the scenario of hyperinflation as seen in Zimbabwe or Venezuela. In these cases, the domestic currency rapidly lost value, leading to soaring prices, empty grocery shelves, and the erosion of savings. While these examples are on a smaller scale compared to a US dollar collapse, they provide a glimpse into the potential consequences. Moreover, during the 2008 financial crisis, fears of a dollar collapse were palpable, although it was averted. These instances highlight the fragility of economies when a currency loses its trust factor. Many economists warn against the possible catalysts for a dollar collapse, including excessive national debt, persistent trade deficits, and waning faith in the U.S. government's fiscal policies. Critics argue that the lax monetary policies, such as prolonged low interest rates and significant stimulus spending, might be sowing the seeds for such a disaster. However, some argue that the dollar's dominance is too entrenched for a sudden collapse, given the lack of a formidable alternative on the global stage. There's also controversy about the apocalyptic nature of such predictions, which some see as unnecessarily alarmist. This scenario underlines the interconnectedness of the global economy. A dollar collapse would not only influence international trade, but could also redefine geopolitical alliances and power structures. As you delve deeper into the topic, imagine the worldwide implications and the urgent need to rethink financial safeguards. If this thought experiment sparked your interest, consider subscribing for more insights that unravel complex economic concepts. Imagine waking up to a world where the US dollar, a cornerstone of global finance, suddenly loses its value overnight. This concept, though seemingly far-fetched, holds significant implications for the global economy. The US dollar is not just the currency of one nation. It is the linchpin of international trade, investment, and reserves. Its collapse would not merely be a national crisis, but a worldwide upheaval, triggering an economic chain reaction hard to contain. The potential collapse of the USD dollar overnight is significant, as it highlights the fragility of global financial systems that rely heavily on the stability of a single currency. This reliance is evident in the use of the dollar for international trade, as countries often prefer it for transactions due to its historical stability and universal acceptance. Furthermore, the dollar acts as the world's leading reserve currency, meaning central banks globally hold substantial dollar reserves to protect their economies from exchange rate fluctuations. Therefore, its sudden devaluation would lead to a global scramble, destabilizing exchange rates, skyrocketing inflation, and plunging the world into economic chaos. A real-world application is seen in the aftermath of the global financial crisis in 2008, which highlighted the interconnectedness of economies. While not a collapse, The crisis showed the significant ripple effects that financial instability could have globally. Another example could be drawn from hyperinflation scenarios in countries like Zimbabwe and Venezuela. Though on a national scale, these examples illustrate the dire consequences when a currency loses its value, leading to immense hardships for everyday citizens and necessitating foreign aid and intervention. Experts like economist Nouriel Roubaini have often cautioned about the over-reliance on the US dollar, arguing for a more diversified global currency system to avert such potential crises. However, challenges to this notion include the ingrained trust in the stability of the dollar and the massive overhaul required for alternatives like a more dominant euro or yuan. This scenario is not without controversies. Critics argue that a sudden dollar collapse is unlikely given current safeguards, while others posit that the strong dollar dependence makes such discussions important to prevent overconfidence in its invincibility. Ultimately, this concept ties into broader discussions about economic resilience and the need for diversified safeguards to protect against such systemic risks. Highlighting this possibility underscores the importance of innovative economic strategies and preventive measures, urging viewers to consider the broader implications of currency stability on global peace and prosperity. At the end of this exploration, we encourage you to engage with this content further by liking the video and subscribing to gain more insights into crucial economic discussions. When discussing the immediate shockwaves, U.S. economy in turmoil, in the context of a hypothetical overnight collapse of the U.S. dollar, it's crucial to capture the immediate chaos such an event would unleash upon the domestic economy. At its core, this concept tackles the sudden and severe disruption in financial stability, characterized by a rapid loss of purchasing power and a halt in trade activities. As the backbone of global finance, the U.S. dollar's collapse would lead to a paralyzing effect on the American economy, triggering widespread panic and economic dysfunction. The significance of this point lies in its role as the initial domino in a chain reaction that would extend far beyond American borders. It sets the stage for a broader discussion on the global recession and financial collapse that would likely follow. This immediate turmoil is the ignition source for systemic failures across various sectors, from banking to international trade. A real-world example to illustrate such immediate shockwaves is the hyperinflation experienced by Zimbabwe in the late 2000s. While on a more localized scale, the skyrocketing prices and worthless banknotes exemplified how quickly an economy could descend into chaos following a currency collapse. Another example is the 2008 financial crisis, demonstrating the domino effect in global markets triggered by underlying weaknesses in financial systems, albeit not as rapid as an overnight dollar collapse. Support for the idea of economic turmoil following a dollar collapse comes from economists who warn that the current global reliance on the U.S. dollar as the premier reserve currency amplifies risk. Some argue, however, that the diversified nature of global reserves might cushion the blow, suggesting that alternative currencies could momentarily absorb the shock. Yet, this viewpoint underestimates the speed and scale of a potential collapse. Opposing perspectives highlight the U.S. economy's resilience, pointing to mechanisms and safeguards designed to prevent such losses. Critics might claim that the scenario is overly dramatized and not reflective of likely realities, considering past resilience shown by the U.S. during economic crises. This turmoil connects deeply with other aspects of the topic, influencing the global recession and financial collapse narratives. By understanding the immediate impacts on the U.S. economy, audiences can better grasp the cascading effects on global trade, market confidence, and geopolitical stability. This segment aims to not only inform, but also evoke a sense of urgency and awareness. the first glance into a complex, interconnected economic landscape teetering on the edge of unprecedented transformation. Imagine waking up to find that the US dollar, the world's reserve currency, has collapsed overnight. What would that mean for you, your family, and the global economy? This scenario isn't just a plot from a dystopian movie. Understanding its potential impact is crucial as it could redefine financial landscapes across the globe. The collapse of the US dollar represents a cascade of events, leading to an economic crisis, global recession, and an unprecedented financial collapse. The significance of this concept cannot be overstated. The dollar's dominant position in international trade and finance means its collapse would send shockwaves through the global economy. It would erode trust in dollar-denominated assets, causing massive sell-offs in U.S. Treasury bonds historically seen as safe investments. Such a collapse would lead to hyperinflation, devastating savings and purchasing power, and resulting in severe economic disorder. Real-world examples provide a glimpse into such scenarios. Consider the Weimar Republic of Germany in the 1920s, where hyperinflation led to banknotes becoming worthless. More recently, Zimbabwe experienced similar turmoil, leaving its economy in ruins. These cases demonstrate what might occur on a global scale if the dollar were to collapse. Experts agree the impact would be catastrophic. Economist Peter Schiff has warned that confidence in the dollar is key to its value. If shaken, it could vanish overnight. Others argue that the sheer size and integration of the U.S. economy makes such a scenario unlikely, unless exacerbated by poor monetary policy or geopolitical crisis. However, some believe that diversification into alternative currencies or assets could mitigate personal risk in such an event. Challenges in this discussion include the intertwined fate of world economies with the U.S. dollar. Critics suggest a move towards a basket of currencies for global trade could be a solution, but such a transition is fraught with logistical and political difficulties. Debates continue over the role of cryptocurrencies as potential safe havens or replacements in a post-dollar collapse world. This exploration directly ties into the broader discussion of economic preparedness and resilience. It underscores the importance of understanding global financial interconnections and encourages proactive measures to hedge against such catastrophic possibilities. As we unravel the layers of global reliance on the US dollar, remember to like this video and subscribe for more insights into navigating complex economic landscapes.